What's up, guys? Welcome back, and today I'm going to be going over my strategy, showing some examples and exactly what the strategy is. Basically, the strategy is inverse fair value gaps, and it's basically when a fair value gap gets disrespected, and I pair this with us delivering from a fair value gap or getting a liquidity sweep, or preferably both. And it's pretty simple, but there are some rules going into it. So I'm just going to go ahead and get started with some examples. Now, the first thing I'm going to look for is a liquidity sweep or delivery from a fair value gap. Now, I personally use liquidity sweeps a lot more than delivery from a fair value gap, but both are valid setups with this strategy. So we have this obvious liquidity here. This is also liquidity, sell side. And if we were to get a buy side sweep, we could look for like a sweep of this or like a sweep of this. But we'll see what we get here. So we'll play price out. All right, so we've swept this, right? And now the second thing would be looking for an inverse fair value gap. Now we have this fair value gap here, but this fair value gap is too small. I have a rule to how big it should be. I don't take anything that's 4 points or less, and I prefer them to be at least 6 points. I have all of the rules in my Discord. They're in a PDF in my Discord if you guys want to join and check that out. But right here, so I wouldn't use this fair value gap. It's way too small. So I'll wait to see if we get something better. And right here, we get a sweep of this liquidity. So now we have a liquidity sweep here. Let's see how big this fair value gap is. This one's only 2 points, so I wouldn't want to use that. Now we just created this new sell side liquidity right here, and we sweep it. So we get a sweep of this, and then we get another move down where we take out this newly created liquidity, and we have this fair value gap here. This fair value gap is 4.75 points. So it's not the best, but it is one that I would take. So if I were to take this, I would take it like this, 40 tick stop loss with a first TP here, and then you could do like a second TP here for like 2.6 risk reward, right? So you could do it like this. And the first thing is I always take my break even. I always move my stop loss to break even after we hit the first internal. So this is the first internal right here. So what I'll do is I'll put, this is take profit 1 and break even, right? And then we have a take profit 2, right? So we have the liquidity sweep, and if we get this inverse, then we have the two things we need: a liquidity sweep or delivery from a fair value gap, right? Like I said, I normally use the liquidity sweeps more. We have a liquidity sweep here, and if we get this inverse fair value gap, then this will be a long. We put our break even at this first internal high, and then we have our second take profit or our full take profit at this next internal high. So let's see. No inverse yet. And right here we get an inverse, right? So we could enter right here into a buy position with a full take profit here. Now let's see what happens, right? Boom, right here. We take off one contract, stop loss to break even, and you just let the rest play out, and boom, full take profit. Now, this is if you don't manage a trade. I personally manage my trade a little bit differently. What I would have done here is when we entered right here, I would have still entered with 2. But right here, this right here is now considered a swing high because the 2 candles next to it are lower. So I would consider this my new break-even point, right? Again, full TP up here, right? And then here we take out the break even, I'm not going to take a take profit here because this is not even one risk reward. I'll keep my first take profit here, but now this is going to be my break even, right? So now my stop loss is at break even. And then boom, right here, again, take off one, and full take profit would have been here, right? Like I said, I like taking my first take profit at the first internal, and you can see right here when we created this new internal, I would have moved my stop to break even after we took this new internal. So now I'll be moving on to the next example. Now with the second example, we have some sell side liquidity here. We also have some buy side liquidity here. So if we get a sweep of something, then I would be looking for a trade, right? So let's play this forward. All right, now we have a sweep of this sell side. We also have a fair value gap, 4.75 points, right? So again, it's not the biggest fair value gap, it's not the best, but it does go in line with the rules, right? One of my rules, again, at least 4 points. I prefer 6 or more, but 4 points is like 4 or less I won't take. So here we have a liquidity sweep. If we get an inverse, we could take a long like this to here, right? Full TP, and I would do a break even right here. This break even is not even one risk reward, so I wouldn't take a full take profit there. So for this, I would probably, you could take some off at one risk reward if you want, or just hold all the way to right here. So also for this example, if I go into the 3 minute, you can see that we are delivering from this 3 minute fair value gap. So this one has delivery and an inverse and a liquidity sweep, right? Delivery and a liquidity sweep and an inverse if we get this, right? So I'll put this up. This would be break even, and this would be TP, right? You could even do like a full TP up here if you wanted, or whatever you want. But this is how I would do it, right? We have about 2R, delivery from this fair value gap, break even at this internal, full TP up here, right? So let's see, play this forward. Right here we get the inverse. We enter in, TP up here. Now, let's see. Boom, right here. Stop loss at break even. And boom, full take profit right here. Again, very simple. Mix this liquidity sweep with the inverse fair value gap. Also, this delivery from a fair value gap. So you could have had either one. If there was no liquidity sweep here and just delivery from this fair value gap, it would still be valid, but I prefer to have at least a liquidity sweep. Again, I said I like using those more. Very simple. Now with this example, again, I'm going to be looking for a liquidity sweep. So we have this buy side liquidity here, this sell side. We also have this sell side, right? So I'll be looking for a liquidity sweep, and let's see if we get one here. All right. We have a liquidity sweep of this buy side and this fair value gap. Let's see how big it is. All right, it's 10 points. So we could be looking for this right here. Right, we could be looking for this short. Target here for a break even. It's not one risk, it's not 1R. So I'm not gonna use that as a TP, but we could do it like this, right? You could even target like here if you wanted to, because these are equal lows, right? We'll do that. We'll target here, equal lows, right? So we'll be targeting these equal lows as well. You put TP1, and then equal lows will be TP2. So let's see. All right, we have a big push down. Seems like we might be able to inverse this. And can see we don't get an inverse here, right? The price did come down below this fair value gap, but it didn't close below. So no inverse. This means no trade. Just because price comes down doesn't mean that you enter the trade. You have to wait for the candle to close at the end of the 30 seconds or the minute, whatever time frame you're entering the trade on. You have to wait for the candle to close in order for it to be considered an inverse. If it doesn't close below, like for this, it's a bullish fair value gap, so we'd have to close below for it to be inversed, right? Then if it doesn't close below, then no trade. Same thing with a bearish fair value gap. If it doesn't close above, no trade. Just because price went below the fair value gap at one point doesn't mean it inversed it. It has to close. So here, no trade. All right, now with this example, we have this sell side liquidity that it looks like we're coming down to take. We don't have to take it, but if we get a sweep of it, we could look for a long. We could get a short if we sweep this. Right, just looking for a liquidity sweep here. And right here, we get a liquidity sweep of the sell side, right? This fair value gap, 4.5 points. It's usable. Again, this one's not the best, but we could get a long here, right? Could get like this, TP here, 2.7. Break even would be right here. At this first internal, let's draw this out. Break even, and this one would be TP, right? So let's see if we get this inverse right here. And we do get the inverse. Now, will I be entering this, right? I will not be entering into something like this. We already took out our break-even point before we inverse this, right? We took it out and then candle closed. We already took out our break-even. Now, some people tell me that they're not going to take the trade. Or some people tell me that they do take the trade, right? But I'm not going to be taking this because I've seen too many times, right, where we take out this internal and price just goes in the opposite direction. So I will not be taking this trade. I would not take this trade. First of all, it messes up the risk to reward, right? Now it's 0.6, right? That's not good. Also, this could be the current draw on liquidity. We don't know, right? It's all a game of probabilities, and this strategy gives a really high probability of your setup whenever you take it. Now, if this internal is already taken, it lowers the probability by a lot. So why would I take it, right? Sometimes it does continue up and it's a take profit. But as you can see in this situation, this does not take out the take profit, right? Price comes back down. So I would not enter off of this. I do not recommend entering. One of my rules is if the internal liquidity gets taken, which is supposed to be the break even, right? If the internal liquidity gets taken, I do not enter the trade. A lot of people don't understand why. This is why, as you can see. I tried to go over some examples on when to take trades, when to not take trades, so you guys can really understand some of the rules. I have more stuff in the Discord. It's free. If you guys want to join it, I'm in there all the time, posting all the trades I take and everything. So if you guys want to go check that out, make sure you guys join it. Subscribe if you guys want to. Leave a like if this video helped. Leave a comment with suggestions on what you guys want to see in the future. And I'll see you guys later.